All right, what's going on, y'all? Today is July 16th. It is a Thursday, and I'm gonna be going over what I saw in the market that led me to taking the trade I did. And I'm gonna have that execution that I did at the end of the video for y'all. Y'all stay tuned. So, starting off like we always do on the dollar index, this is the daily chart. Yesterday, price had dropped through. You see this consolidation we've been having for the past around week and a half. We dropped through all these clean relative equal lows into a area of support on the daily chart, this balanced price range, which is created by this run up. Price trades back down into this candle, and then we rally higher from there. This whole range from the high of this first candle to the low of the second candle is balanced. So if bullish like we are on the dollar index, when price returns to that, you want to see support found. So that is kind of the bias slash narrative I had going in today with dollar. It's kind of the dollar flipping back bullish because obviously we have these objectives on the monthly chart that I'm looking for, at least short term. This breaker, and we have this inversion for value gap, monthly high. So that's all things that I'm looking for to be delivered on the dollar. And we finally broke down below the consolidation, found support upper quadrant. So I am anticipating the dollar to continue higher, which means I am risk off on the index markets. So going into today on the NASDAQ, again, any reviewing I'm doing right now is not hindsight. This is the stuff I was looking for today, as I will show you in the execution that I took. But yeah, coming into today, ignoring this candle. Yesterday, we had traded into this bearish order block, the opening price. You see, we already previously reacted from that level. Got a little move down. Price reprices into that opening price. And we actually have an SMT form there. You see, we do not take this high for Friday. Yeah, that was Friday last week on July 10th. I'll show you real quick on the S&P. Friday last week, we do take that high, so we have a bearish SMT formed in the NASDAQ with ES, or bearish SMT formed inside of an order block, which is high probability for me to know that we are likely to continue lower. See, we also do not close the body within the sell side imbalance, inversion for value gap. No body within there. Trade through the high into the opening price of this order block, and we get a nice rejection. So I am looking for price to deliver into consequent encroachment of this long wick that was used to run out these lows right here, because that is an imbalance on a lower time frame that price is likely to retrade back into, especially if we are bearish, because we are risk on with the dollar index. So I'm leaning more towards shorts as opposed to longs. So liquidity resting above this upper quadrant of the wick, that is a nice target for me to look for. Yeah, and then consequent encroachment, which was delivered, see right now, just before market close. And then possible objectives to look for in the future. If we continue lower, we have this swing low that the wick created, and then these relative equal lows, which is also previous month low. So here on the hourly chart, you see we again are looking at this daily order block, the opening price. We trade into it here, displace lower, market structure shift. We have a SIBI created, and you see overnight just ahead of London, the bodies are remaining within that SIBI, showing the real narrative, and the wick is allowed to trade just into the opening price of this bearish order block that is formed based on the daily bearish order block. So that is also another added confluence that we can be looking for lower. We have midnight opening price. We trade just above it. Again, the bodies remain in this SIBI right here. Then we displace lower. Again, continuing sell side delivery. SIBI created in London, repriced to the high. Get a nice rejection. Body doesn't even close anywhere near the lower or the low of the SIBI, which shows a nice continuation. You have this wick. Price is able to trade through it with a fair value gap. And then in the morning session, we trade up into that wick, consequent encroachment, leaving the high of the AM session. And you see, obviously, the bodies, again, showing the real narrative by not closing anywhere near the low. So you can see price is very heavily bearish. And actually, in this candle, which is the 9 o'clock candle, is where I caught the trade because we delivered Tuesday's low and then upper quadrant of the daily wick as my drawn liquidity. Of course, looking for continuation to consequent encroachment, but there was a pretty deep retrace before that delivered. But I mean, the profile stays the same. I was looking for a classic sell day profile, and it was delivered, leaving London highs untouched as we continue sell side delivery deep into the PM session here. It's 3:40 now. We're still creating lower lows, showing you that price is very heavily bearish today. So here we are on the 15-minute chart where my entry was basically framed. I use this mitigation block for my entry today, which is basically the up move, which creates a failed higher high. See, failed swing high, then we drop below. When price returns to it, if we are bearish, price will continue lower. You see also it is a bearish order block using these four up close candles. It's a bearish order block, or this last down close candle as our mitigation block. And this is also the same wick that we're looking at on the hourly chart. So it's kind of added confluence there. So looking at this mitigation block, you see we trade into the consequent encroachment. Price stays weak, and then we deliver our objectives here. You see we even return into that, remaining in the lower half, which shows a very heavy weakness in price. Even though we get all this consolidation back and forth, price ultimately continues lower throughout the day. You see this bearish value gap here. Price respects, a little time distortion with the bodies, but price remains within the high, and then nice continuation lower in the PM session. So yeah, this 15-minute mitigation block is what I use for my entry, targeting these lows, this low down here, this daily low, and I will show you that on a 1-minute chart. Quick, looking at the regular trading hours, this is one of the first things I was looking at as the market opened, because anticipating a classic sell day, I do not want to see price trade up into the upper half. You really want to see rejection from the lower quadrant because it is a large gap. It's, what is that? Over 200, about 250 handles. So you want to see rejection at the lower quadrant, which we get here precisely with the bodies, and also within that 15-minute mitigation block that I was looking at. So that's a really high confluence area, and you see that is used to deliver these sell side objectives. So going back to electronic trading hours, you see that level is that lower quadrant of that opening range gap for the day. See, we open up, trade immediately into this buy side, ORG lower quadrant, midpoint of that mitigation block, which is a very high confluence area. The bodies respect that precision, and then we get our nice displacement lower, market structure shift, return to this bearish order block, and price returns to opening price as well. We have first presentation for value gap, which is what I use for my entry. As soon as price wicked up into it, I entered at the low, anticipating that this high would remain as a high for the morning session. And then you see we get nice sell side delivery. Another order block formed here after the rejection. You want to see price stay below that. It does, wicks into it, and then nice continuation lower. Another fair value gap formed. Fair value gap formed, wick into it after delivering all this sell side from pre-market. Mainly this is the liquidity pool I was looking at, but I wanted to see nice continuation to Tuesday's low. So this is what I think. Actually, there was a new week opening gap just below. I'll show y'all my new week opening gap chart real quick. Yeah, so just below the daily low, we have a previous new week opening gap from like a little less than a month ago. 290 was the exact level I was aiming for. See, this new week opening gap leads basically to the low of the morning session, and then price gets a big retracement, bigger than what I was looking for. Sorry, I'm on the wrong chart. All right. But yeah, we deliver new week opening gap low, 290, about right here, just below this sell side liquidity pool. And we also deliver upper quadrant of that daily wick. And that is all I was looking for. You only need a portion of the daily range. Even though I was expecting initial continuation here, I wanted to take the low-hanging fruit, especially with the way the market conditions have been. Don't get greedy. I think I learned that lesson, so kind of dialing it back a little bit. But yeah, you see prices still just melting lower. All right, so here we are on Top Step Express account that I've been showing y'all. Here's my execution. You see it's only one execution, one trade for the day, one win, one loss, whatever it is. That's all I'm taking. Trying to stay disciplined with that. That's the least I can do, you know what I'm saying? But you see we have this first presentation for value gap, which I use for my entry. You see the low comes in at 449. I use one tick below just to make sure I get the entry, which I would have been afforded anything really because we traded through his whole range. And let me see, show y'all the position tool. Stop loss I had at the rejection block. Could have been a little tighter, but I don't want to try to overdo myself, do too much. I could afford this risk, so that's what I took. And then I targeted that 290 level, which is the old new week opening gap high. See, exit right at that level. 2R trade. If I could have done anything better, I would have probably had my stop loss a little tighter above mean threshold of this bearish order block right here. See, we don't even deliver into that. Kind of protected by this first presentation for value gap. But yeah, I mean, I'm proud of this trade. Again, I mean, it created this whole move right here, created the low of the AM session. So I'm glad I didn't get greedy or nothing like that. Follow my model this time, you know what I'm saying? So yeah, this is just to show y'all that I somewhat know what I'm doing. Yeah, I hope y'all enjoyed the video, man. Like it, comment, let me know some. Catch y'all in the next one.